Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at a fun one. We don't take, we don't talk about this one a ton, but these are the live cattle futures, the LE, for those of you on NinjaTrader. Now, the live cattle futures are not the most liquid market in the world, but between this and the hogs, we actually get some pretty good movement. Now, as we can see here, the movement was relatively range-bound, right? Looking at yesterday's overall momentum, not really much, but a slight bullish trend. It double-bottomed to kick the day off and then started rising higher. But once it made it to a new high, all it ended up doing was just falling right back down. Now, it does still end up being a fairly strong bullish day, but with a decent amount of wick on the highs, right? So we open up here and we close up here, which means that the daily candle looks something along the lines of this: wick on the bottom and wick on the top. And that tells us that it's a pretty bullish day. It'll be interesting to see what happens when we gap down like this, right? So we gap completely underneath yesterday's movement with the open right here. The sellers try taking it over. They got bear follow through, but not that great, before finding the buyers pushing it right back again. Now, the buyers, they never even got a trigger in, right? It never moved above that bull candle before the sellers gave it another shot, and that one is even worse than the prior. Then we see the buyers give it another shot, so lots of back and forth here. And you'll notice the buyers never triggered in again. So we're getting a little bit of back and forth here, but it's almost like they're coiling the spring together ahead of a potential breakout move rather than anything else. Both sides are getting bad follow through, but one key element here is that the sellers are getting follow through in the sense they're getting triggered in, but they're not actually getting any continuation. So even though the buyers aren't getting triggered in, it puts the ball in the buyer's court a lot more aggressively. And when they finally get a shot, right, big bull candle closing near its highs, only one tick away from the top, that is a buy signal for a potential breakout to kick off the move back into yesterday's range. Now, after that drive higher, chances are when we start getting this amount of bullish momentum, the first pullback is going to get bought, and they're probably going to try to get a gap fill. But they missed it, right? They have a big bull move up, they trigger in the buyers, and it immediately shuts down and goes back the opposite direction. That is a bad sign for the buyers. Now, buyers were probably buying into this move, buying at the lows, buying the close of the bear bar, etc., hoping for that gap fill. And they never got it. And when you see a huge candle like this completely against that position, the buyers they're not going to stick around, right? They got in, they got a nice pullback, they did everything right. The market didn't want to cooperate, and it's telling you, hey, you might want to get out a little bit earlier than risking the full amount of move, because this is one heck of a bearish candle. Now, if you are aggressive, that does beg the question of, hey, you might want to sell here. Is it possible? With that big of a bear candle, and knowing the buyers are trapped, and also knowing that they're probably not going to want to stick around if that bear candle triggers off, I think it's a great place to look for a possible sell to drive the market back down, assuming that now we may just transition into a range. So we get a big sell move down, we hit the new lows, and then it fails to go lower. So a little bit reminiscent of what we've seen across the board here. We've gone into a range. We have a coiled up spring. It breaks out, can't finish the objective with a gap fill, falls flat on its face to a new low. The buyers pick up the lows and try to push it back up. The one reason why I don't have a buy marked here is mainly just due to the fact that this is a heavy amount of bearishness. Now, this was a heavy amount of bullishness, and you expect the same thing. When you get a correction, a counter move, the first one that occurs is likely going to get sold. And the fact that this came up, retested that earlier entry point from the sellers, that would have been a break-even whip out. Imagine if you were a seller, you saw this big move down, you move your stop to break even, only to see it tap you out to then fall right back down to the lows. We've all been there before. So what is likely to happen? You get a big bear candle down, the sellers who got whipped out early are going to chase it, causing another move down. Now, because this is a range, you're not necessarily anticipating a new low, but you're expecting them to at least give it a shot, possible inventory support, and that may just be good enough. So a great little sell signal to end off the day, and you can see they're still fighting over that low. So overall, not a market that we take a lot of time to look at, but it is a great market for those who are looking to maybe add a little bit of extra to their trading workspace. Live cattle futures, the LE. So that's going to do it for today. Hopefully you learned something. Hopefully you found something useful, and maybe you learned a little bit of something and hopefully found it a little bit entertaining, I guess. Until tomorrow, we will see you all later.